welcome back to F.A.C.E on our 3rd anniversary week, Chris.
Hi, can you hear me? Sound check?
Yeah, got you, buddy. Welcome back to F.A.C.E on our 3rd anniversary week.
Good to be back. Do we do video for this or just audio only?
So you hover your mouse.
Yeah, I got Zoom,
share,
so
share. Yeah, you can share your screen now.
Cool, and then give me a second.
There we go.
I get the Q&A portals up.
So it's been a long time.
How are things on your end?
Good. You know, it's ForexAnalytix is an overnight success in 3 years. How are you? How are you doing, buddy?
I'm gonna start video because the host has stopped it. So.
Oh, you want your mug on it? You could show you.
It doesn't matter. It's up to you if you want to do it.
It's okay.
Not too great.
It's fine the way it is. So,
Cool.
what's on your mind? People that don't know you, Chris, you know, you have a lot of credibility and authority as not only a trader, but as a teacher, as an analyst, and you're always on the cutting edge, looking for a new edge. And, you know, I see some of your students tweet in my stream, and congratulations on, you know, creating a legacy of teaching people how to not get run over in this market. Welcome back.
There's, you know, it's really interesting because I've been expanding a lot over the years in terms of what we're teaching. And there's a lot of things you see on YouTube, you know, of like these young YouTubers who were like former real estate people, or one of them's like a magician, and now they're getting paid tens of thousands of dollars for giving stock trading advice. And then when you see their stock trading advice in their videos, you're like, oh my God, you would be personally horrified. Some of the things that you see people out there. And so, you know, it's just, it seems like the training industry and the trading education industry has just kind of gotten flooded as of late, and very few people with institutional experience like yourself or myself, people who had worked for, you know, banks or CMEs or floors or whatever, or hedge funds. And, you know, it's just,
you know, I don't know about you, Chris, but I've never traded a pandemic before. And these guys don't even remember 2008, let alone 2000 or 87, or, you know, that markets can move in 2 directions, and people are learning that you're not a genius because you bought a spider and rode it through a bull market, right? You like that one? Huh?
Yeah, I mean, you know, I trade through 2000. You trade through 87. You trade through
1929.
Yeah,
I was on the floor with Jesse Livermore. So I've seen.
You were 10 years old back then.
They let me on the floor. I was in kindergarten, but I was paper trading, and they let me on.
You and Jesse were writing the quotes on the chalkboard at the.
I'm the reason. You know, I'm the reason why Jesse committed suicide. I was an illegitimate
I do remember
son.
him mentioning a Dale from Chicago in his books and his memoirs. So I didn't know. It's good to know that was you.
You know, operations of a commodity operator. So, what are you doing here to stand out? I think the best thing you can do to stand out right now, Chris, is be honest about risk and be ethical, and then you're not promising blue sky because, you know, it rains.
Yeah. You know, and that's an interesting thing, because I've had a lot of students email me, you know, that they're just crushing it right now. And, you know, I have one student, he made about $190,000 in the last month. So he's had a really good month. But then when I looked at his equity curve, you know, I noticed that it was one of those equity curves where you see like small gains and then you see this really big jump.
Yeah. And
how do you get those? You get those from risking too much. Right. And, you know, he's much more of a gambler style that's more addicted to risk. Like, he's someone who's used to dealing with like selling and buying of high-end cars and things like that. So for him, there's a certain rush that goes with it. And, you know, he sent me his report saying he made, you know, a few $100,000. He did great, and I'm happy for him. But I also said, look, you know, when people trade this aggressively with risk, it actually affects your brain and your hormones. And so human beings need testosterone to take on risk. If you have no testosterone, you can't take on risk. That's why men are much more aggressive with their risk trading and taking risk when it comes to trading than female traders, because they have more testosterone.
Chris, that I'm 66 now. And
So you're just bustling with testosterone.
I've low T. I'm so grateful that the CME came up with a micro S&P contract for me.
Right.
It's for
you and Arnold, they got about
for
the same
traders.
Right now.
Traders with low T can trade micros.
Well, if you look at think about all the big losses. Think about the and let's think about like Boaz Weinstein and his mess up many years ago and things like that. All of them were on big winning streaks. And when you go on big winning streaks, your testosterone increases. It just continues to increase. You get addicted to the wins even more. But then a problem is that when the testosterone gets too high, then the risk becomes blind. You're becoming overly aggressive, and it's more of like you're trying to go for a cocaine fix than you actually are trying to make an intelligent trade. And so you're right. There was a lot of geniuses in the bull market, of 2009, 2010 onwards. There are people that have never seen the 2008 crisis, so they've never even seen a bear market before. And just like Bitcoin, when it was like climbing up in 2017 and then, through December that year, there were all these genius traders in coffee shops. I used to go into coffee shops and I was like, what the heck? Where did all these traders come from? I would see all these laptops open with charts and I was like, wait a minute, I come to this coffee shop all the time. There's never this many traders. And then I sat down next to one of them and he's like, are you a trader? And we talked, yeah, I trade this and this and this. And he was like, I just trade Bitcoin. And I was like, oh, okay. And so, I got to like get to know him. And, during a bull market, anybody can be a genius. Now that we have a two-way market, you're seeing really who's made of what and who's experienced what and how do they manage risk and how they manage their emotions. And so,
Chris, that's a great segue because I used to raise money for CTAs.
Mm-hmm.
And, most people, when they're raising money for CTAs, they want to look at performance, what their best days. Sure. I always looked for what was their worst drawdown. Okay. Yeah. And how did they handle and manage that drawdown? So you talk about testosterone when people are being aggressive during the drawdown period. What happens to traders hormonally? Do they start filling up males with estrogen and go fetal on the couch?
So yeah.
Huh? What does the opposite
They're
happen?
In the Me Too circles.
Because I've been fetal before. I was just wondering, what's the hormone driving me
there's
the
a
couch.
Testosterone dump. What happens?
Oh,
there's testosterone dump, and it's kind of like a massive hangover. And then because they don't have the testosterone, they lose all confidence. Yeah. And so they end up making worse mistakes. So they have a big loss. The big loss creates a testosterone dump. The testosterone dump makes it harder for them to actually take on risk. They become fearful because they're not operating at high levels of testosterone. People who've had winning streaks of, say, 20 plus trades or something like that, or where they've seen, every trader's had winning streaks. Yeah. But new traders are always very vulnerable because during that winning streak, they're not really afraid. They're just kind of trading as is. They're really trading in a very kind of clear mental way. And they go on this winning streak and they build confidence. And the winning streak continues, they build more confidence. And the winning streak continues, and confidence. And then what do you hear from a lot of these new traders? They're like, some of them, if they're smart, they will say, I don't know, I feel like, it's coming towards an end. That's them hitting the edge of their comfort zone, that they're not used to trading this well. And usually when that happens, there's a psychological mean reversion. And then what happens? They have one big loss that offsets almost all of their gains. Yeah. And so you've probably heard that story hundreds of times with beginners. They go on winning streaks, they do great, and then what happens? One loss. And all of a sudden they're just like totally
translates to everything, doesn't it? Athletes, any kind of performer, you're in a peak performance zone and then you slip out of it and sometimes you can't find your way back.
And that's the difference between people who have experience and people who don't. People have experience. So if you look at athletes in crunch time, there's always this idea that there's like this crunch time player that he's totally clutch. And in actuality, what's happening is in high stress moments, it's not that the best athletes are performing above their baseline. Their numbers actually dip a little bit. But the difference is that they're managing the stress of that very well. So their performance only dips just a very small amount. But the people who aren't managing it well, their performance dips massively. And that's where they look like they're clutch because they're not making the mistakes that everybody else is mistaking. So, I'm glad you said that when you were raising funds for CTAs, that you looked at their worst days. That was
Yeah.
what happened when I got applied for a job at a hedge fund, which is that they wanted to look at every single trade I'd done over the last year. And I had one big loss after that. And they were super critical of it. And then they noticed that I had not only adjusted risk after that, but then I started to rebuild gains after that. And they felt like, okay, you managed a big loss pretty well. And that was kind of the final decision,
Well,
which is
that's
that,
interesting. There was a guy when I was on the floor that owned a clearing firm where he had a lot of big local traders, and he let them trade themselves into deficit where they'd be, red ink. And he
right.
always said it's the guys that could come back from that ended up with a career.
Yes.
So yeah, so really, you don't. It's like that. You don't know what you have or whether it's faith. You don't know if you have it till you need it.
Yes. And I think that's where true confidence comes in. My girlfriend had asked me, I've been with her for now 8 or 9 years, and she had asked me many years ago when we started dating, she said, where does your confidence come from? And I said, well, what do you think? And she said, well, you've, achieved a fair amount of success, financial and personal and things like that. And I said, to be honest, that's not it. It's the fact that I failed many times, but was able to come back from that, like to
Yeah,
completely fail. 20 years ago, I was living out of my car. I was
yeah,
living out of a 2-seater car. It was a Miata, and like to have everything you own in a little 2-seater, and, to come from that to this definitely builds confidence. But I made many failures and setbacks along the way. And it's the ability to get back up and recognize your mistakes and then correct them, and to take it personal, but not personal. I made the mistake. I made those mistakes, and to own them, but to not
yeah.
make it like, oh, I'm a bad person, I'll never learn how to trade. And, that kind of self-identification creates a really negative self-image, and it imprints in a way that, yeah, you don't think you will be able to trade.
It's all in
So
our heads, Chris. And I'd say the audience today probably isn't used to hearing an interview like this, where you're really talking about the psychology and all of what translates in our mouths. 90% of it is psychology. So I know that's something that you really take an interest in. You look at a trader and look at them holistically and help them with. If you can master your emotions in trading, does it translate in life for people?
the ability, anytime you build emotional intelligence, it generally translates to other aspects of your life. And in many aspects, I would like to, you mentioned a legacy. If I could leave a legacy, I think it would be that one of the things I'd like to do is to be able to make trading a part of mainstream college education. Because think about the benefits
Nice.
of becoming a trader. So when even if you don't have to become like a professional trader or anything like that, just like a course in trading for a year, because what's one of the great things you learn about trading? Risk
Your,
versus reward. And how many times
yourself.
have you,
You learn about yourself.
you learn about yourself? So you learn about yourself on how you are with money, and how you are with success and losses, on how you are with failures. Trading is not a linear learning curve. So when people who are good at other things come to trading and then they fail, their confidence is really tested. I have an engineer student. He's super bright guy. I mean, like high IQ dude, and very successful at many things that he tried. When he comes to trading, and all of a sudden trading just kicks him in the butt. And so, he initially wasn't confident. I said, well, this is a real test of that confidence that you think you have. So you learn about yourself, and let's just take the basic things about trading: risk versus reward. How many times have you personally applied, an analysis of risk versus reward in other things that you do in your life that aren't trading? That you're like, I don't know, the upside on this doesn't seem that great, or the downside seems like it's too big for me to take that risk. That's a valuable lesson for college students to learn: risk versus reward. So there's that: managing money, understanding how your investments are going to work over time. Wall Street doesn't want college students to become good traders, because if that's the case, then they're not going to pay for, a lot of these managed funds and passive investing, so that all these passive funds can make all these fees. They don't want that. They want them to be the smart people, so that you give them their money. and
There's
then they
always a surge in the desire to become self-directed after a market takes a hit in 2000, 2008, and now
yes,
again,
yes,
where people are saying, if anyone's going to lose my money, it's going to be me.
yes, brilliant
And
insight. And
that's what's happening again.
it's unfortunate that it takes a major loss for people to say, okay, I'm going to take this into my own hands, because why would you change something if everything's going well? Passive indexing, passive investing was great, from the latest bull run, but now a lot of people are actually legitimately starting to question that. We've had a massive shift from active to passive investing because we just had an uninterrupted bull run for years. Now people are starting to go, maybe that buy and hold strategy isn't such a great thing. Why my stock's down 50%? Is that such a good idea? So you've
Four
seen a
years
lot of
of
investors like
gains, 4 years of gains given up in 3 weeks before
in
the
three
recent
weeks.
recovery.
Well, how about the whole I bought it for the dividend theory?
Hmm.
That's, I bought it for the dividends is great during bull markets, but if you're buying for dividends and you're buying and holding long term, you're trading for one full cycle. You're trading for a bull market and a bear market.
How
And
about oh, go ahead, finish, Chris.
as we know, bear markets wipe out value faster than bull markets build them. So
Yeah. How about I don't want to take profits here, even though I know things are overvalued because I don't want to pay capital gain taxes.
then they're gonna
They wish
take
they
a
had wish they
they're
had
gonna take a
capital gains.
50% haircut on their, I mean, there's a lot of people who are buying Delta. Delta was so stable for years. There was a lot of iron condor plays in the option market because it was super stable. And people are like, oh, well, I love Delta at 50, so I might as well buy it at 40, which, okay, I don't understand that theory. It's the whole dividend theory has kind of been destroyed now, because you should love dividends, but you should love capital gains even more. How many people got rich off of dividends alone? No, you got rich if you got rich off your stock portfolio, you got rich off your capital gains, not on your dividends. Your dividends became a compounding income over time, but not something that has, over long term. You don't sit there and like, wow, I made millions of dollars from dividends. That just doesn't happen. So, the
So
dividend theory has kind of been blown out of the water now because
okay.
people have actually experienced a bear market. And now you get to see like, okay, buying and holding isn't an effective strategy. It's just not an effective strategy. You're basically saying, I'm only going to make money in one market cycle, and I'm just going to take it on the chin and the gut for the other market cycle. That doesn't make much sense.
Okay. So
It just
we're
doesn't.
looking at Delta here, and you have that orange box, some type of line. I'm not sure, is that a moving average or
Oh no, that's sorry, that's
VWAP?
VWAP. It's an anchored VWAP. So when I do
Okay.
stocks, if I'm
Hmm.
not doing intraday, then I go to anchored VWAP. So
Okay.
VWAP normally is just day trading, but anchored I found works really well. Delta's in trouble. Obviously, you heard about Buffett selling millions of shares. Buffett, for him to sell shares, he must have been really spooked.
Yeah.
And if you look at Delta, what we said on February 28th, we wrote an article, is the stock market going to crash from the coronavirus? And one of our top recommendations was sell airlines. So back in this week, we said, Sarah, sell airlines. Every airline's been down massively. Delta's in trouble, I think. I think a lot of airlines in trouble. Delta's blowing through 60 million a day. So if they were to get the full 25 billion
Yeah.
from Congress, how long is that going to last them? What, a month? That's not going to last that long if you're blowing through 60 billion a day. Like
Chris,
travel.
that was you just repeated the Bobby Axelrod trade.
Yeah.
Do you
So
know Bobby Axelrod?
I don't know Bobby Axelrod.
Oh, it's in that series Billions.
Mm.
And his big score was shorting airlines as the planes went into the towers. So yeah, this was a
Ah,
Bobby Axelrod trade, short the
yeah.
airlines.
Well, one of my students crushed it on actually my chief course instructor, Sasha Gogolin. He crushed it. He sold Boeing around like 315 and
Yeah,
rode it all the way down. He's
wow,
up like 38% on the year. So he's
nice.
crushing it. He sold, that was his big thing. He sold a lot of airlines. We recommended in our article, our big thing was sell airlines, sell entertainment, sell hotels, because nobody's going to fly with borders closed. That's obviously pressure on them. Nobody's traveling inside Europe. Nobody's traveling to Asia right now. So airlines are going to be under pressure. And do you really think people are just going to want to just start flying normal again when,
Yeah, I
at the end?
wanted to ask you. I know you've given some thought to this. So,
Yeah.
first of all, um, natural disaster, this
Hmm.
coronavirus, or something else?
Tricky. There's evidence on both sides that it was man-made out of Wuhan. I'm not an expert in this
Okay,
field, so I've
all right,
limited, but
that's
yeah,
fine.
it's a pandemic.
I don't know is a good answer because there are times I think I have an opinion and then
What do you think?
I'm at the I don't know. I
Yeah.
kind of think it was I don't know where it was made up. I just made a poem and China rhymed with one of my lines, so I used it. But I don't think this was I called the Bat Cave and asked Batman if the virus really jumped from a bat to a human being, and he denied it. And I kind of think it was from a bat to a test tube to the human race. So that's
You
my
think so? You
opinion.
think it was created in a lab?
Yeah, and I don't know where. And it
Yeah.
could have been an accident, and who knows, all of that stuff. But what I'm interested in is, a lot of people are hoping this is going to be over, and a lot of people I talk to says, there are waves that, we may not be through with this for 18 months, 2 years of on and off. It recedes, and then you can have another wave. Normally, with everything, you don't have just one wave, normally three.
No.
And in 1917, they actually did have three.
Yeah.
So what are your thoughts going forward? Is this a new normal for us now, Chris? This is our world?
It's interesting that you mentioned the waves. I have a good friend who's an ER doctor, and they've done a lot of research on this, now that they're home right now, basically. And
Yeah,
so a lot of people are kind of looking let's just take the US. A lot of people are looking at New York as kind of like the lead because they were, the
yeah,
hotspot of that. Go figure population density. That's,
yeah,
that's New York. But the thing about it is that it's not like it got to the US uniformly. It came in pockets. And
right,
so some of them got them early and they're, coming towards the peak sometime this month. But then other areas are starting to build up. Washington was the first one that got hit and where I think the first death was. But New York didn't even have any cases for weeks later. So New York may come down, but then you got Louisiana, and then you
yeah,
got Georgia, and then you got Florida, and then you got all these other things. So it's not like the U.S. is a monolith in terms of infections. It's not like everybody got them all at the same time. Every state got
yeah.
them at
It's
the
not
same
like
time.
Greece where they shut down, and Italy they shut down the whole country.
Correct.
Completely
And
different.
so
Yeah.
we haven't even gone to an Italy style lockdown yet. So
Do you think
I
we
think
are going there?
possibly if New York was to get way worse and way out of control, or a couple other hotspots turned into New York, possibly. But I also think you would see massive social unrest if we went to an Italy style lockdown. It's
Yeah. Okay.
Americans aren't used to having their freedoms, taken away from them. And there's definitely a fair amount of fear against government, panic and stuff like that control.
Yeah.
So
Okay. So getting back to the markets and what you're seeing here, we've had a recovery in the indexes. The airlines haven't done much. Uh, yeah. So we've had a nice
I
little
it's
recovery.
I think this is I think the recovery is an illiquid one. I think it's a lot of short covering. I think we're going to see more legs lower. If this truly is the recovery, this would be the fastest bear market in history. We've never had a bear market shorter than 3-4 months.
Yeah.
So if and markets don't just V bottom. They find me a bear market that just V bottomed. I've looked through all of them. There isn't a market that V bottom. Bottoms took time. They took on the short end. If you were to go back all the way to 1987 or even 1956, where we had 10 different 20 plus declines, 20+% declines, none of them V bottomed. They all had several waves up. Then they usually made another leg lower. They had long periods of bottoming that the shortest one was about 80 to 90 days. I can show you. I kept all this up here. So
Yeah.
look at this. These are all, let's go full screen, and this is back to 87. Okay, so that's 217 days bottom, with many 10, 15, 20% rallies.
Yeah.
This one here, 147 days. You go a little bit further. Okay, this is a short one here. You got
But you
8
still
weeks.
had a retest.
You still had a retest. You always have a retest. So a lot of people are like, hey, is it time to buy stocks? I'm like, look, bottoms like this take time. And if you look at pandemics throughout history, it's different than a war. In a war, we can make machines to create economy and commerce, but in a pandemic, you can't. It's not like buildings or things were destroyed. What's been destroyed is economic wealth. So
Well, is all the power of the Fed being behind this make it different in any way? Because they were able to generate a 10, 11-year recovery from the last recession. Is it possible they can hold things together for another few years with it being, we'll do whatever it takes? I mean, $1 trillion here, $1 trillion there, pretty soon it's real money.
I think if they were to do an infrastructure bill, because then the money's going to pass to jobs and everyday workers. That's
right.
So I think that if there is an infrastructure bill that does make it, I think that's the best solution out of all this. All the other prior stuff is going to benefit big corporations who over the last 10 years were spending 75% of their earnings in buybacks.
Yeah, engineering.
So, yes, exactly. So a lot of people are like, oh, it's cheap. And I'm like, yeah, cheap to what? To the all-time highs?
Yeah.
To 10 years of buybacks? That inflated prices. So to me, the markets aren't cheap.
Yeah.
To me, they got more to go. So I think an infrastructure bill is our best shot at that. I don't, otherwise you're throwing economic money at a health problem. And if you're going to do that, you have to give it to the everyday person. But even then, I feel like right now we're in phase 2, or we're starting phase 2 of the economic downturn. The March was
the car wreck.
Shock. Yeah. March was we just hit the iceberg.
Right.
But, the ship hasn't sunk yet. There's still there was time between hitting the iceberg before then the ship sunk. And so now, we're starting to see second tier effects. How many businesses are meant to have zero income for 2 months? Like if April's a wash and they can't open till end of April, how many businesses can go no income for 60 days?
Yeah.
How many?
Especially if you're counting on government to run smoothly and get money in their hands.
Oh,
do you think that'll ameliorate it, or is that just placebo?
I think it's a little placebo. If you look at the kind of the bailout has already had problems because the banks are implementing their own individual criteria.
Yeah,
which seems kind of weird. So that I think that's causing problems in and of itself. So I think now is the phase that you're going to start seeing second tier effects. There are some businesses that are going to be closing permanently by the end of April. They just don't have enough cash. I have a friend whose business within 4 years made it to the Inc. 5000. He employed a high growth strategy, which means that you don't keep a lot of capital in savings.
You're leveraged.
You're leveraged to the hilt. And now, he was like, dude, he's like, I had to lay off 20 people. He's like, I am struggling just to come up with 2.5 million because he's spending 150K every 2 weeks in payroll. So, where's he going to get that? It's just not available right now. So I think now at the end of April, you're going to really see the tide go out a little bit and see who's swimming naked. That's right. So to me, the plays right now is
you trade pretty naked, Chris. Look at your charts.
How did you know?
And you know
is
what?
My webcam on?
No, but I was going to recommend you keep the shades drawn. All right, you don't want to get thrown out of the neighborhood.
I did a webinar once in my towel. my friends didn't know it at FX Street, but I did a webinar once in my towel. I realized the time change, and then I was kind of in a bad spot, and I was like,
I did it in my pajamas for years. That's nothing. Anyway, you know what, Chris? I could talk to you for hours about so many things that where you have to.
Should we talk trade ideas real quick?
Yeah, let's go through a couple of potentially actionable things here.
Okay, so I think if you want to trade the short side, I think one of the best opportunities right now is in commercial real estate because a lot of commercial real estate landlords are not getting rents.
Yeah.
So, I think it was something like 75% of all commercial real estate landlords did not get rents this last month.
So is it a REIT you short or what is it?
Actually, I'm looking at UK real estate, UK commercial real estate. UK commercial real estate was having kind of a big upswing. So if you look at, let's go. So like land, there's just tons of them, but a lot of them were doing okay. And then look at how much they're getting hammered.
Wow. Yeah.
Some of them are starting to recover, but if you
Yeah.
look at it, I think there was a lot of real estate values that were just kind of doing this.
Yeah.
Or, and so
Yeah.
a lot of them are going to suffer. And UK is still, they're still early New York, like a couple weeks ago in terms of their infections right now. I mean, the prime minister is
Right.
in trouble. So,
Right.
do you think anybody's going to be, really excited about commercial real estate right now? I don't think so. I think if you want to short, you can short these right now. Airlines are still under pressure, and I think we might lose some airlines. That's for sure.
How about the dislocation in the bond markets, Chris? I mean, TLT, the bonds, the
Sure.
yields they went to during the initial phase of the crash, but then I saw TLT go from 180 to 140 in a week
Yes.
when the bond markets froze and LQD commercial paper, that the Fed had to get permission to come into the commercial paper market. Isn't what we're talking about here, and that's why you're looking at commercial real estate, is we're really in a credit crisis now.
Yes.
So
Well,
and the bond markets are so huge, wouldn't there be lots of shorting opportunities in debt?
I'd agree. I think liquidity is actually really bad as a whole right now. How many times has the S&P had a market on close 20, 30, 40 tick jump? Does that sound like good liquidity to you?
No, look at how gold is trading. I've pulled up
Yeah.
gold candles. I go, this is dysfunctional.
Yeah,
They're taking away markets from us. They're raising margin. I hope they keep the casino open, bro.
well, here's the answer to your question. If somebody thinks the market's recovering, usually there's broad-based buying. Like there's
True.
across a lot of asset classes. And there's usually not really bad liquidity in multiple, asset classes right now. We're seeing in the bond market, we are seeing it even in the options market. I've been looking at the options market heavily lately, and I'm like, wow, the liquidity is kind of thin in the options market right now.
You have to make an appointment to trade TLT.
Yeah, exactly. So, and even like, let's say EMFX, that was one of the other trade recommendations that we had, was go short EMFX,
Yeah.
basically.
Yeah.
The South African rand, the Mexican peso, the ruble, and things like that. So that, the liquidity and the spreads on some of those things were just blowing out. I mean, like some of the spreads were just ridiculous. And so I'm like, okay, liquidity's not here. This is definitely not a recovery, So like when you look at ES, to me, it feels like we're kind of in a dead can't bounce, and you can see volumes just declining. So
Yeah.
you have these 20, 30, 40 point ticks on market on close. That's not high liquidity. So I think this is a combination of shorts covering and low liquidity, and some people really, really wanting the bull market to resume. But I think that's going to fail in the near future, and I think we're going to see another leg lower, and I think we're going to see new lows.
Okay.
So,
you have a number or area in mind that you're thinking?
In terms of where it stops, I think it's going to stop just short of 3,000. I don't think we'll make it to 3,000. I think we're
No,
going
I
to stop
mean to the downside when it rolls over.
I think 16 to 1,700. Somewhere around this base. Maybe
Yeah,
even
that old top that was like, yeah, and there was something even at 1550.
Yes.
Going further back, that was, I think, the high of '08 and
Yes.
2000.
Yes.
Yeah. Okay.
I could see the 1550 all the way up to 1900 being the base, or being the bottom of it there. So
Okay.
I think that's what we're looking. I think there's going to be some trades of our lifetimes in EMFX when they do finally calm down. Because if you look at, when was the last time carry trade was viable?
Yeah. Good point.
From our FX experience, the last time carry trades was viable was, 03, 04, 05, 06.
Right.
And then after that, rates just started going down, 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 down. So G10 FX, there's no carry trades. But in EMFX,
yeah,
I think you're going to see some carry trades of your lifetime, as some of these start to mean revert.
That's what Steve Volge has been talking about. There's going to be like home run balls in some of these.
Huge.
And you need a turn in the dollar for this to happen.
You need to turn the dollar, or you can play euro if you wanted to. You can go Eurozar, you can go Euromax, Euro Ruble.
Oh, okay. Interesting.
That would be, because euro super low interest rate, so you actually, you can benefit a little bit more from that. I like EMFX against euro, and then dollar for sure, but I would like it better against euro because Europe is really getting hit right now, and there's a lot of weakness in Europe right now. So that's
what a great What a great recap and interview, man. So yeah, I mean, we talked about everything today, Chris.
What didn't we talk about?
Why your website and how people could follow you and get in touch with you and work with you.
SecondSkiesForex.com. We are, you can find all our free material here. We've had over thousands of articles. We're moving more onto YouTube though, so we're going to start, pretty much putting all of our material into YouTube, so they can check out our YouTube channel as well. But yeah, SecondSkiesForex.com. We do webinars for our members every single week, and we have several courses, stocks, commodities, FX, everything across the board. But our goal is to change the way people think, trade, and perform. It says right here, change the way you think, change the way you trade, change the way you perform. And we combine my 20 years of studying neuroscience at the university. That was my focus, was human learning and memory. And then also my experience in psychology and, meditating for 20 years. I've learned a lot about the mind that kind of gives me a unique perspective, I think. So I take that and I combine it with my approach to understanding the markets, which I trade price action, like you, I trade price action and I trade order flow, and that's how I trade the markets. So.
Okay. Corona, fear that I'll own you. Born in a
Yeah,
lab in China. You saw that one, didn't you?
Yeah, I did.
You? All right. Yep. Anyway, so Chris, it's always great having a conversation with you. And
you as well. You stay healthy, and
too,
always good
Chris.
to be back. And then let's do it again on another anniversary.
Okay, let's do it before that. And
that'd be great.
Everyone, that's Chris Capri. You can follow him at Second Skies Forex, and that's also his website address. Great seeing you again, talking with you, my trading warrior brother. Good hunting, and may all your loved ones remain untouched.
And you as well. Be safe, my friend.
Okay, buddy. All right, everyone, that's a wrap. And that's a wrap for the week. Since we're most likely, I won't be broadcasting tomorrow. I want to thank everyone for hanging out with us this week. And please stay home. We all have great futures ahead of us. So be patient, just like you have to be patient with the market. Let trades come to you. Let's just get through this and protect yourself, just like you protect yourself in the market. Protect yourself from this virus. And we'll see everyone on Monday. Have a great weekend. That's going to be a wrap. Same to you. All right. And most of all, don't just count your pips, count your blessings. Thanks again, Chris. See everyone.